It's a weird thing in the market. Sometimes a company will post what looks like a fantastic report card, but Wall Street, well, it reacts like they totally flunked the test. And that's exactly the puzzle we're digging into today with GitLab. They just dropped their second quarter results, and on the surface, things looked incredible. But behind the curtain, something clearly made investors really nervous. Okay, so let's just jump right into it. GitLab's stock took a pretty big hit right after they released these numbers. So that brings us to the core question here. The one we're going to try and answer. What on earth did the market see that wasn't in those shiny headline numbers? Why this huge disconnect between great performance and a negative reaction? To really get why everyone was so confused, we've got to start with the good news. And trust me, there was a lot of it. The story the main figures told was all about impressive growth, really solid efficiency, and a ton of momentum. So first up, the big number, revenue. They pulled in a whopping $236 million for the quarter. And yeah, that was a solid beat on what everyone was expecting. And look, this wasn't just some random big number. We're talking about a 29% jump in revenue compared to this exact same time last year. Let me tell you, in this kind of economy, that kind of growth is not something you just ignore. And get this, they weren't just spending like crazy to get that growth. Nope. Their non-GAAP operating margin, which is basically a key way we measure how profitable the core business is, hit an incredible 17%. That tells you they are running a really tight ship. And when you lay it all out like this, year over year, the picture gets even rosier. That revenue growth, awesome, yes. But the real showstopper here? Look at that operating margin. It jumped by almost 700 basis points. That's a full 7 percentage points. And their free cash flow? It just exploded, up over 300%. I mean, you look at these numbers, and by almost any standard, you'd call this a home run quarter. And of course, the company itself felt pretty great about it. The CEO, Bill Staples, came out swinging. He basically said, see, these results prove how strong our AI-powered platform is. You can just feel the confidence here. Okay, so you've seen all of this good news, which leads to the big question. Why on earth did the stock drop? Well, it's because, as anyone who follows the market knows, the headline numbers, they're just the cover of the book. You got to read the fine print. And more importantly, you have to listen to what the execs are saying about the future. All right, so let's do just that. Let's read between the lines. To figure this all out, we need to unpack the exact things that got the market so nervous. And these weren't on the front page of the press release. They were kind of buried in the details and on the investor call. And when you dig in, it really comes down to four main things. First, a big change-up in the C-suite. Second, their outlook for the future was, well, let's just say cautious. Third, they're in the middle of a massive overhaul of their sales team. And finally, they mentioned some weakness in one of their smaller business segments. Okay, let's kick off with the real bombshell. The CFO, Brian Robbins, is leaving. Now, for Wall Street, any sudden change in a critical role like chief financial officer is a huge red flag. It just injects a ton of uncertainty into the picture. You start wondering about strategy, stability, the whole 9 yards. And that CFO news ties directly into the second big worry, and this one might be the biggest of all. This is what really sent a chill down investor spines. Even after posting that amazing Q2, GitLab did not raise their forecast for the rest of the year. And you can hear it right from the outgoing CFO himself. He's basically saying, hey, we did great in Q2, so we're just going to lower our expectations for Q3 and Q4 to keep the full year number the same. That is a textbook move when you're feeling cautious about what's ahead. And this chart right here, it shows you exactly what that caution looks like in practice. It's a huge deal. After growing at a healthy 28% in the first half of the year, their own guidance implies that growth is going to slow down to just 21% in the second half. For a company valued on its growth, a slowdown like that, well, it's a major red flag. So, why the sudden caution? Well, a big part of it is this third point. They're in the middle of a massive shakeup of their sales team. Their goal is to get much better at winning brand new customers, which has been a bit of a sore spot. Now, long-term, that's probably the right call. But in the short term, ripping up your sales playbook is messy and disruptive. And that kind of risk is exactly what they're now factoring into that cautious forecast. But look, this isn't just a story about playing defense and managing risk. GitLab is making all these painful short-term changes because they have their eyes on a much bigger prize. They are going all in on their AI-powered future, and that's where the real excitement, the bull case for this company, truly begins. And we're not just talking about those simple AI tools that suggest a line of code here and there. No, their entire game plan is built around something called agentic AI. Think of it this way. They want to create AI agents that are like autonomous members of a development team. These agents can handle complex, multi-step jobs all on their own, from start to finish, without a human needing to hold their hand the whole time. And the product that brings this all to life is their new GitLab Duo agent platform. What's so clever about their approach is that it's an open ecosystem. Look at this. They aren't trying to build their own AI to compete with giants like OpenAI or Google. Instead, they're integrating with all of them. Their strategy is to be the central command center, the main workbench where developers can plug in and use whatever AI model they prefer. It's a really smart Switzerland strategy. Now, this AI strategy doesn't just create cool tech. It completely changes how they can make money. Right now, GitLab's business is pretty simple. They charge per person per seat. But the future model is a hybrid. They'll still have that seat-based revenue, but they're adding a whole new layer, a usage-based fee. They're going to charge customers for every single task their AI agents complete. That could be massive. Okay, so there's this big fear out there, right? That AI is going to replace developers. And if that happens, GitLab's whole business model falls apart. But their own customers don't seem to think so. They did a survey, and a whopping 78% of them said they actually expect to hire more developers because AI will make their teams so much more productive. It's not about replacing people, it's about supercharging them. So where does that leave us? When you step back and look at GitLab right now, what you see are two completely different stories being told at the same time. And this creates a real dilemma for any investor trying to figure out what this company is actually worth. It's like this. On one hand, you've got the bull case, this incredible long-term vision for an AI platform that could be huge. And it's backed up by the fact that they're already really profitable and their customers stick around. They're setting themselves up to be the neutral ground in the AI wars. But then, you got the bear case, and these are immediate problems. You've got the risk that they mess up this big sales transition. You've got instability from the CFO leaving. You have a growth slowdown that they are forecasting. And you have the underlying issue that new customer growth has been sluggish. So in the end, it all comes down to one single massive question. Is all this short-term pain, the executive shakeup, the sales chaos, the scary guidance, is it just the necessary price they have to pay to pivot and totally dominate the AI development world in the long run? That is the multi-billion-dollar bet the market is trying to figure out as we speak.